But Dalal Street has also witnessed a host of block deals over the last few days. Let's connect with V. Jayasankar, the Managing Director and member of the board, Kotak Investment Banking, to talk about these block deals and how he's read into them. Jayasankar, thanks a lot for joining in. It's been a while since we've spoken to you, so thank you for taking the time out and speaking to CNBC-TV18. It's been block deals galore. How does one read into it? And what do you see? I mean, is this a trend that you see that can continue, given the kind of momentum that we have in the markets right now?
Yeah, I would agree. It's raining block deals. And I would say this is a trend that you have seen really gain momentum over the last 2 to 3 years. And the primary reason is the strong DI flows. Last year we had $42 billion of institutional money coming in, split equally between foreign and domestic. This year, in the first 6 months, you already have DIs pumping $26 billion, which is more than what they did the whole of last year. And if this trend continues, you're going to probably see a flow between foreign and domestic of $50 billion plus. So with that kind of money coming into the equity market, obviously it needs some new destinations. And I think in that context, blocks are a great tool because these are overnight trades mostly. And IPOs tend to be a lot more long drawn. So if you look at the first 6 months, very few IPOs. Of course, the next 6 months is pretty heavy, but the block deals have given the kind of conduit for investors to invest in good stocks.
But why, Jayasankar, hi, morning, Prashant here. But why, so local, domestic, of course, are buying. But again, that old question, why are where is the money going? So you must have a sense when you get a lot of this stuff done, you'd have a sense of, so promoters are selling 2%, 3%, 5%. Where is the money going? Is it going to buy homes, real estate? What's happening? Or is it coming back into the market through family offices?
So, Prashant, the block deals sources are primarily three. One is, of course, the foreign promoters. You have seen Timken, Vodafone, Singtel, and a few others sell. They've been pretty sizable back, for example. And I think the foreign promoters selling this current year is probably in excess of $6 billion. You also have Indian promoters selling. You had Mahindra & Mahindra, Cipla, Tata Sons selling their stakes. So the domestic promoters have also monetized. And the third category are your private equity investors, right? And there have been multiple blocks, for example, in Embassy REIT, in Mankind, and so on. So I would say these are three primary sources. And in all the three cases, obviously, because these are all come through an FDI route, primarily, or if it's an Indian promoter, they probably are using for multiple sources. A part of it may come to the market, but the balance there is tough to say. But if a PE investor is monetizing, he's still investing through some other funds. So in that sense, FDI is growing.
You said the promoter selling stands at $6 billion this year, which includes domestic, foreign, all of the three categories. 6 billion.
Total blocks this calendar year has been 13 billion. I was telling you the figure just for the foreign promoter selling. The balance $6 to $7 billion are between the Indian promoters and the private equity investors.
This calendar year, right, Jayasankar? 13 total and 6 from foreign promoters.
That's right.
Yeah, no. So so again to that question, Indian promoters selling, just specifically out of the three, Indian promoters when they're selling, is that should that be in any way used as a signal at all, as a comment on what they would, go on. Sorry. And of course, each case is different. I mean, 1-2% sale is very different from a 5-10% sale. But I just wanted your thoughts.
Yeah, see, at the Mahindra and the Cipla sale were just about a couple of percentage points. So it's not really big. Even if you look at Tata Sons selling down in TCS, Tata Sons holds closer to 70% plus. So selling $1 billion in such a large company doesn't dilute their stake much. So promoters, particularly Indian promoters, continue to stay very, very strongly invested into their companies. And there may be multiple reasons why anyone is doing this small monetization.
Okay. Now, let's move away from that to something which was approved yesterday at the SEBI board meeting, Jayasankar. This is the the delisting norms, a fixed price option which has been introduced now, right? Will there be takers for it? The question was put to the SEBI chairperson. She said, well, this was a demand from the industry. what is your sense? Will companies who want to delist, who were not able to, because maybe there was a small group of shareholders who were holding out and not letting it go through, I mean, would a fixed price get the job done? What are your thoughts?
So we have to see, Prashant, because it's still early days. Obviously, SEBI is trying to facilitate companies to delist. And I think you should wait for the first couple of delistings to be attempted through this route. And maybe if there are any further fine-tuning that's required, I think all of us will find some solution.
But no, I'm not asking you to specifically say whether it'll be a success or not. But is it an improvement over the current book building process?
Yeah, that is true, because the model price leaves the leverage completely in the hands of a few concentrated investors, and often leads to a green mail. And companies are stuck because they just can't delist. And to deal with multiple shareholders is not easy. See, overseas you have something called a forced delisting once you reach a particular threshold. In India, the norms are very different, and the model price is the one that made it very difficult. So in that sense, giving the fixed price option is one of the routes. It should help probably in some of the instances where the promoters are stuck.
Got that. And as you said, I mean, we'll see how it goes once it is attempted. What about have you looked at the holding company norms? Again, which has been approved by SEBI yesterday. What do you make of it?
I've not really gone into much of detail on that front, Prashant, so early for me to comment.
Okay. Got that.
All right.
Just one before we let you go. Do you have in terms of new issuances, IPOs, Jayasankar? There are a few which have been, there is Ola and there is Swiggy, and I'm talking about the bigger ones, but of course there is a steady stream of some of the smaller ones as well. How much of paper are we expecting through the primary route for the rest of this calendar year at an approximate level?
See, so far in the first half, we have seen about $4 billion plus of IPOs. I would probably guess it should more than double that quantum. So there are a number of IPOs which will try to time the market before the end of the calendar year. And I would say if you look at it a little broader from an 18-month time frame, you probably are going to look at $25 to $30 billion of paper coming in, which is really good, right? End of the day, when there is so much of flows, particularly from the domestic, foreign money also waiting in the wings, you need a lot of paper. I think IPOs will provide a very strong source for deployment.
Okay, we will leave it at that. Thanks a lot for joining in. Well, for now, very good-looking screen. So let's get the technical guest on board. The Nifty is up 100 points. The